Good morning, David here, weekly wheat look. Today is 2nd of September, 6:41 in the morning. Pre-market open, looking at UK November 2016 UK wheat chart. And as usual, we'll start with a long-term monthly chart. I will just pull that up on bar chart at the moment, and you can see here that obviously we've had a big retracement as we closed August, and we had two up candles. We missed the third, obviously, because this now is a retracement candle, and we're starting September here at 123. So at the moment, we obviously went up to reach our high target, 134. The low is 110. Obviously, preceding that, we've got a long-term monthly downtrend, and then obviously we've got sideways price action at the moment. We were looking for a breakout, and at the moment, what we've done is slipped back into sideways price action. I'll just show that on the pro charts here. See here, this rejection candle here. First target hit 34. Obviously preceding that was July, where we then were looking to break out this top here at 24.50. Obviously at the moment we're just below that at 22.80. Pop down into the weekly. And you can see here the weekly candle forming here that we've had. Preceding one was here. And you can see the big red reaction of last week, and that's followed on from there. Back in, and here we are on the daily. Now, interesting on the daily, I'll just bring this across here. You can see here, this is our line in the sand here that we were looking back for the last few months, June, July, August, and that was 24.50. And you can see that the market gap down. So this is Thursday, Wednesday, Tuesday. Gap down below this 24.50, which is the swing high here, and obviously left this gap here. If you use that as a measuring gap and you take a measurement of that, half of that move, the next support would bring this down here at 115, 116. So at the moment, unless we see a retest of this gap and a hold of this gap, then obviously we could see another go for the high. But I think more likely now what we've done is we've slipped back into a sideways action again that we've been in for the preceding months before that, unless we can break out of this 100 above this gap, 124.50. Let's look for some reason behind this fall. And obviously this has been the big fall in the US market. I would think that's aided to the big world crop at the present moment, and obviously we've seen a fall of 30 cents since my last report. We have found support here at 3.90, and last night's close was positive. So basically preceding that, I was working out that if you take out £1 is equivalent to $5 for 5 cents in the US. So basically we should have seen about £6 a ton fall since last week, and that has basically, not quite, but obviously that can probably be explained for some of this recent fall. But the main, probably the driver at the present moment, if we go to the currency, and you see here we've got a much firmer power of the pound than we've had, and you can see here we're back up above the pre-Brexit levels. This is the pound against Deutschmark, so we've lost our advantage of currency at the present moment. So obviously with two of them factors together, that's obviously why we've seen a weaker market at the present moment. And probably looking at the chart, we had got it slightly overextended on the wheat market, and markets obviously don't follow in the same direction. We'd hit our first target at 34. Obviously we're looking then for 37 and 140. Obviously what we've slipped back into now is a sideways trading market. Obviously the key now is, obviously you said, keep an eye on this gap fill or back to contest this gap, and I'll put an update this time next week.